Hello, everyone. I want to share with you quite a simple method of trading that someone who is learning, someone who is new, can begin on and begin to be profitable quite early on. A very simple method, and you can begin this little by little. It doesn't mean that you won't have to enter in with lots of funds or anything at all. Something to start with. Okay, so here's what I'm going to do. We have some people that are trading in the Indian markets and in the US markets. Right now, I'll start with the Indian markets, and I'll begin with the index, the Nifty 50 index, which is uh, the kind of a combination of the top 50 companies in India. And so I'll begin with the monthly chart, right? Monthly chart means that each candle like this represents 1 month of prices. So on the monthly chart, I want to make sure that the 200 period moving average is above the 20. And then I go to the Nifty on the weekly chart, and I want to make sure that the 20 is above the 200. Then I go to the daily chart, and I make sure that the 20 is above the 200. Okay. Now I go to the first stock that I'm going to consider. All right, BEL. Now, what do I mean by considering the first stock? Well, this is simply an example. I do not recommend that you trade BEL or any of the stocks that are on my list. This is not a recommendation for you to buy, but this is simply a way to give you some methods that you can use for your trading experience. Okay, so you'll notice that I have 3 tabs open, and I put BEL on all 3 of them. So I begin with the monthly chart, and I realize that the 20 period moving average is above the 200. Then I go to the weekly, and I see that the 20 is above the 200. Okay, and then I go to the monthly. I'm sorry, the daily. And even in the daily, the 20 is above the 200. Okay, now what do you do if this is the case? Well, as I said earlier, first check the monthly, make sure that the 20 is above the 200. Then check the weekly, make sure the 20 is above the 200. Then you go to the daily chart, make sure the 20 is above the 200. Okay, you got that much? Then, for someone who doesn't have a whole lot of time and don't really care to spend that much of your effort on this, what you can do is maybe weekly. Take a few minutes every week, make sure that these charts are lining up on the monthly, weekly, and the daily charts. Now, as long as the daily chart is in this setup where the 20 is above the 200, you could keep buying and make sure that you stay in that trade. Okay. Now I want to go back on BEL and look at its history. What you will find is that as long as the 20 was above the 200, I want to show you the kind of profits that was possible here. All right. From the time, now this is quite a bit of time. This is all the way from May 2023 to January 2025. How much time? Not a whole lot, but still it is um, approximately what is that? Almost 2 years. Okay, but in almost 2 years, that was 184% gain by simply looking at these two moving averages. Okay, um, yeah, that's a whole lot more than you would get if you were to put your money into a savings account or even a long-term fixed deposit account. You'll still do much better, and the evaluation is not very complicated. Now look at another example, IOC, that's Indian Oil Corporation. Okay, I go to IOC and I make sure that all 3 of my tabs are on IOC. All right, this is the second example that I'm using. And in IOC, I observe that the 20 is above the 200 on the monthly chart. The weekly chart, the 20 is above the 200, except that you see that it went up to the all-time high and it got rejected and it went sideways for some time. Now I go to the daily chart. Okay, I've looked at the monthly, weekly, and now I'm looking at the daily chart. Now you'll observe that on the daily chart, okay, you would have exited at this point as the price went, the 20-period moving average went below the 200. Now, will you buy at this point? Well, at this point, I will wait. I'll wait until the 20-period moving average crosses above the 200. And that's when I would begin to enter and buy just little by little, one or two shares right there. Now, then what I would do is what I'm expecting to happen is that from this point on, all the way to the all-time high, there's about 36% gain. Do you see that? Okay, but I won't enter just right now. I will wait until the 20-period moving average has sufficiently moved above this. Okay, now another one I'm going to look at is BSL Nifty. Okay, this is an ETF that tracks the Nifty. BSL Nifty. I want you to look at this. All right. This one also, I want the 20 above the 200, but this one has not existed long enough. This fund has not existed long enough to have a 200-period moving average, but still you can see the trajectory. Okay. Now you go to the weekly chart and you'll see that the 20 has been above the 200. Then finally, on the daily chart, see the 20 has just gone above the 200. So these are three that I would use as examples to show you how to enter. So first of all, make sure that it's trending on the monthly and the weekly chart, and then you make your entry decisions and your exit decisions on the daily chart. Okay. Now, then from there, I go to our friends in the US who are trading, and I'm looking at the S&P 500 index, okay, which is top 500 companies in the United States. And I'm going to look at that index and then make sure that the index is also trending before I take this strategy. Now, of course, again, the S&P 500 doesn't have enough history to show on the monthly chart, but then you'll see that it is moving significantly upward. And then I go to the weekly chart and you'll see that the 20-period moving average is above the 200. Then I go to the daily chart and I see that the 20-period has recently moved up above the 200. You see that? And so this is a point where I would say, okay, it's time to start entering. Now for this, I have about 4 examples here. Okay, again, these examples are only examples, and these are not intended to be buying decisions. So I'm not saying that these are stocks that I recommend and that these are stocks that you should buy. No, not at all. But this is just a way that I'm showing you an example. So first of all, I'm looking at Coca-Cola, Coca-Cola company, and you'll notice that the 20-period moving average is above the 200 on the monthly chart. I go to the weekly chart. Again, the 20 is above the 200. Then I go to the daily chart, and this is where I make the decision if I should continue buying or not. And here you'll see that I have the 20 above the 200. And this is a point where I could begin to buy and continue in the trade as long as the 20-period moving average is above the 200. Okay, so you can continue buying and staying in the trade. So someone who is trading and doesn't have a whole lot of time, maybe once a week or maybe even daily, you can take a look at this. It takes you just a few minutes, and then see, is the 20 above the 200? Okay, that means stay in the trade, and if you have funds, you can buy more. Okay, now we'll go to another example, McDonald's. Okay, here's another example. Let me go to that chart as well, and on the monthly as well. So you'll notice that on the daily, weekly, and monthly chart of McDonald's, I'm looking at the 200, the 20-period moving average above the 200. Now I go to the weekly chart, see the 20-period moving average is above the 200. Okay, you'll see this is like a staircase, and I've used this name staircase strategy, and others have also used that. Now I go to the daily chart, and what I do is I make sure that the 20 is above the 200. And as long as it is, I keep buying. Something interesting about McDonald's is that the price has dipped down here, but still the price is above the 200 and the 20 is above the 200. So if this is one that you are following, you could keep buying as long as the 20 is above the 200. Okay. And this is intended for something that you would hold on for long term. Now, for how long? Well, it's hard to tell. Okay. Like, for example, as long as the 20 is above the 200, you stay in the trade. Now, let's look back in the in its history and see what is done. Okay, you'll see that it's been sideways and sideways for some time. So what you can do is you could stay in this trade as long as the 20 is above the 200. Okay, and then so basic idea is if you're following about three or four or maybe five of these companies, okay, some of them may not make a whole lot of profit for you. Like, for example, this one, if you calculate from the time you entered until till right now, okay, well, till right now would be right here. To right now, it's only about 9%. Okay, that's less than 1 year, and it's only 9%. So this really would not do a whole lot of good for you, but still, it's good to look at that and see that if you're trading with about 3 to 5 different companies, okay, there's a good opportunity that several of them will make good profits for you. Okay, now let's go to Walmart on the daily, weekly, and on the monthly chart. Okay, and we'll begin with the monthly chart and look at the trajectory of the monthly chart, 20 above the 200, and you'll see how it is moving up. And the weekly chart, the 20 is above the 200 for quite a long time. Now you go to the daily chart, and we say that this is where you make your entry and exit decisions. Okay. Now remember, on McDonald's, it didn't really make much of a gain, very little. But look at Walmart, and you'll see that from the time that the 20 went above the 200 till right now, that's about 88%. Okay, from December 23 to June of 25, that's 88%. Okay, here is BTC, that's a Bitcoin ETF. Now, this BTC doesn't have number of years that it's been trading, but you'll see that the trend, you'll see the trajectory, okay? And you'll see a couple of places where I've entered, but just ignore those, the weekly. And then finally, here is the daily chart, okay? And the 20 is above the 200. So I would just stick with it and keep entering. Now, I have a few more that I'm watching that's on the bottom here. Okay, here is SRF. That's the daily, the weekly, and the monthly chart of SRF. Okay, so here's the monthly chart. We'll begin with that one. And you'll notice that on the SRF, the 20 is above the 200. Okay. Here is the monthly chart. The 20 is above the 200 on the SRF. Not the monthly, this is the weekly chart. The first one was the monthly, this is the weekly, and now finally the daily chart of SRF. Here it is, see? Okay, so from the time that the 20 went above the 200, what have we gained? If we were continuing in that trade up to right now, that's about 29% from January 2025 to June 25 in about 6 months time period. Okay, that would be SRF. Now we're to look at another one, MassDoc. Okay, another example. Again, I'm mentioning that This is not a recommendation to buy any of these or not to buy any of these, but this is simply a way to show you how to evaluate. So with MassDoc, you will see that on the monthly chart, it doesn't have enough history to have a 200 period moving average. Okay, but look at the weekly. Okay, the 20 is above the 200. The daily chart, the 20 is above the 200. You see that? So if you had entered March 2025, and by now, April, May, June, right? 3 months. That's about 50% gain in 3 months of MassDoc. Okay, now let's go back into a further history of MassDoc and see how long, if you had entered when MassDoc went above the 20-period moving average and stayed above the 20, where the 20 moved above the 200 and stayed above. Here's one example right about here. Okay, and this is where the 20 went below the 200. Okay, and that's August of 2022. All right, so that's about 2.5 years. That was 1,351%, 2.5 years. Okay, so as I said, when you enter maybe 3 to 5 companies like this, you may run into some companies that didn't really make you much profit, but then in between you'll find some companies that will go like this. You see that? As long as you stayed in the trade, okay, you stay in the trade as long as the 20 is above the 200. Look what's happened. Now, will all of them go like this, move like this? No, they won't. But still, this will give you an example of how you can handle this. Here's one, Cochin Shipyard. Okay, let's look at this example, Cochin Shipyard, and on the monthly, weekly, and the daily chart. So we'll begin with the monthly chart right here. And we don't have enough history to have a 200-period moving average. But on the weekly chart, we have enough history, and you'll see that the 20 is above the 200. Now, the daily chart, you'll see that the 20 is above the 200, except that for some time, it was below. So I would not enter during that time. But you'll see that the 20 has been above the 200 all this time. See this? Okay. Now, if you started entering at that point where the 20 went above the 200 and stayed in the trade all this time, okay, look at that. That would have been 865% from August 2022 to October 24. Okay, that's a little bit over 2 years, 864%, right? Now, some might look at this and say, wait a minute, it had gone up this high, 1,721. But then the problem is you don't know if it's going to continue going up further. So if you're continuing to follow this simple pattern, you would continue holding until the price had gone back down again, but still your profit would be about 877. Okay, I hope this makes sense to you. Now let's go to 2 more examples. FSL is one, and then let's go to FSL on the daily, weekly, and the monthly charts. FSL. Okay, we'll begin with the monthly chart. The 20 is above the 200. Weekly chart, 20 is above the 200. And now the daily chart, the 20 is above the 200. Now, that's been a short time. See that? It just went above the 200, just right there. Okay. But let's look at the history before that point. Okay. When the 20 had gone above, right here. Okay. So the 20 had gone above right at that point, right here. And let's suppose that you stayed in the trade all the way through. That's 195% from February 2023 to April 25. That's a little bit over 2 years, 195%. Here's FSL. Okay. All right. Now, last example that I'm going to look at is Wells Fargo. Again, this is not a recommendation to buy any of these companies. Okay. Please do not buy these companies, but please do take a look at the strategy that I'm sharing so you can learn the strategy and apply it to companies that you would be interested in trading. Okay, so we're looking at Wells Fargo, and we'll start with the monthly chart. And you'll notice that the 20 is above the 200. And the weekly chart, the 20 is above the 200. And then finally, the daily chart, the 20 is above the 200. Okay, now let's look at the most recent move when the 20 went above the 200. Look at the most recent move. All right, that's 13% from May till, what is it? Let's see, May till June. That's about in 1 month, 13%. Okay. Now, previously, you'll notice that there's been a jump, but not very much. Look at that. If you go from here to this point where the 20 went below, that's 18%. Okay. October 2024 to April 2025 in less than 1 year, but it's only 18%. Not a whole lot, right? Okay. But if you go further back, you'll see more of that type of movements. Okay, now some people would say that this is too simplistic and that you're missing out on all of these profits. I understand that, okay? But this is a simple strategy that I'm sharing for people that don't have a whole lot of time. And for some people, they're not able to go through all the details of trading and to figure all this out, all the details out. You can stick to just 2 lines and follow the trend. Okay. And if you do this with about 3 to 5 or 6 companies, all right, out of that many, if you get at least 3 or 4 out of 5, all right, that are trending well, you'll make the profits there. Okay. Now, the others, will you lose out? No, not really. You won't lose out. You won't be, and for the ones you do lose out, it won't be a whole lot. Okay. So this is one simple method that I'm sharing for those who do not have a whole lot of time and for those who are just learning. Okay. So in that case, what you can do is you can just add as long as the 20-period moving average is above the 200, you can keep adding little by little. And that would be a very simple process you can follow. Okay. But when you do that, make sure you look at the overall trend. Like, for example, for the Indian markets, it would be the Nifty. And the US market would be something like the S&P 500. So make sure that the index itself is trending upward. Okay. As long as the index is trending upward, you can use this kind of a strategy. Okay. Thank you. I hope this is beneficial to you. And if you have doubts, please and make sure to ask questions in the comments below. Have a great day.